Donald Trump's new global tariffs sent shockwaves through the markets, stock prices dropping sharply, wiping out trillions of dollars. Big tech companies lost billions in value, and the U.S. dollar sank, as all fueling fears of a global slowdown. But Trump says the economy is going to bounce back. Now, you've likely heard all about the stock markets falling today. We wanted to get a sense of what those losses are telling us about the likely impact of the tariffs. Karl Schamotta is chief market strategist at Corpay, a foreign exchange firm, and he joins us now from Toronto. Let's start, Karl, with Asia, where markets are opening it up. It's early Friday morning. What are we seeing there?
Right, we're seeing the sell-off continue. The damage that began shortly after Trump closed out his speech yesterday has continued through the last 24 hours, and it looks likely to continue right through to tomorrow morning's session here in North America.
So the big numbers from today in North America: the Dow plummeting 1,600 points, S&P and NASDAQ dropping the most since 2020. The TSX also posted its biggest decline in 5 years. So as we look at the big numbers there, what do you make of that?
The big verdict here that markets are giving us is that Trump's trade war is very likely to take a very negative or to have a very negative impact on the global economy and ultimately on earnings. And so why is this happening? The obvious is that tariffs being placed on exporting countries could damage export sectors and lead to job losses, lower consumer spending, and widespread economic damage. But the other issue here is that in the U.S. itself, where tariffs are going to raise costs, they're going to raise import costs, where they're going to snarl supply chains, where they're going to impact broader business investment and things like that. A lot of the damage is being concentrated there. And so I think this is something that, perhaps the administration didn't expect, in the sense that markets are very much telling us at this point that the worst damage is going to happen in the United States itself.
Yeah, Trump is very quick to dismiss anyone who criticizes them, either by insulting them, dismissing it as fake news, for example, or, his political opponents are not being fair. It feels to me, but I'm curious to hear the answer from you, that the markets kind of see through all of that. The markets are, people are analyzing what they truly believe the real impacts will be on the economy. But what's your perspective on that?
That's the reality. I love how you put that, because it fundamentally is the case that financial markets are independent, right? They're not. It's pretty much impossible to how shall I put it, intimidate financial markets. It's very, very difficult to get financial markets to, sort of toe a given line as far as, the rhetoric is concerned. And ultimately, markets are a way of, very soberly analyzing the possibilities that might come down the pipe in the future. And so I think at very many cases in history, financial markets have given us a very accurate read of underlying fundamentals, even if we don't hear that from the politicians who are pushing policies forward.
And is there anything you see when you look at kind of zero in, not the big numbers for all those stock markets, like, the ones I gave, but how specific sectors are doing? And I'm thinking especially tech sector, but is there anything that you're seeing that the market is really raising a red flag about?
I think there is a very clear reversal happening in things like basic consumer spending. The staple sectors in the U.S. economy are retreating quite dramatically. This does come after a number of earnings, sort of downgrades, CEOs saying that customers were getting strapped financially, that they wouldn't be able to withstand a price increase, coming from tariffs. That's feeding through into a very sharp decline in share prices. And so, I think that, paired with what's happening in foreign exchange markets, where the U.S. dollar has retreated dramatically in the last day and a half and has, essentially wiped out all of its gains since Trump was elected in November. Both of those things are really, telling us that the damage in the U.S. economy could be quite severe. And certainly, could get to the point that it starts to put pressure on the administration to reverse direction on these policy changes.
A lot of Canadians have a lot of money in stocks, and in a lot of cases, it's their pensions, it's their retirement money, their retirement plans, and people are probably nervous right now. What do you say to them?
Well, I think the issue right now is we are going through a very rough period. We are going to suffer significant damage to the economy, to financial markets more generally. But if we look at the fundamentals of sort of human history, the reality is that the human race tends to innovate its way out of troubles like this. We have had reversals many times throughout history that have sent asset prices down, that have caused sort of widespread depression among citizens. But we've ultimately come out of that with some form of innovation. And so, the key at this point is not to overreact to what you're seeing in the headlines, to stay invested and to kind of wait this out as much as you can. And I know that sounds like it's really easy to say. Of course, there are going to be problems here, and we can't sugarcoat the reality. But in the long run, if you can take a long view, you are going to come out the other side in better shape than you are today.
Karl, it's really nice to have your analysis. Thank you very much.
Thank you.
Karl Schamotta is a principal strategist at Corpay, a foreign exchange firm, and we reached him tonight in Toronto.